Mongolia is one of the least densely populated countries on Earth, a country of approximately 3.5 million people, sitting on some of the largest mineral resources in the world: coal, copper, gold, and rare earth minerals. But despite that enormous potential, Mongolia remains a small frontier market that many investors completely overlook. So the question is Mongolia an undiscovered opportunity or a country where the risks outweigh the rewards? When most people think about Mongolia, they might think about the rich history and culture, open landscapes, or the Mongolian Empire. But modern Mongolia has a very different story. Located between the two major powers of China and Russia, Mongolia sits in a strategically important location, and beneath its land are massive natural resources that could shape its economic future. Mongolia's economy is heavily built around mining. Its biggest exports include coal, copper, and gold. Mining drives government revenue, foreign investment, and economic growth. The centerpiece of Mongolia's mining sector is the massive Oyu Tolgoi project. This is one of the largest copper and gold deposits in the world. Rio Tinto is projecting that between 2028 and 2036 annual projected copper production of 500,000 tons per year. And as global demand for copper increases because of electrification, renewable energy, and infrastructure growth, Mongolia could become increasingly important. But there's a catch. Most countries have trading partners. Mongolia has something closer to economic dependence. A huge percentage of Mongolia's exports go to China. That creates opportunity in that China needs resources. Mongolia has resources, but it also creates risk. If China slows down or commodity demand falls, Mongolia feels the impact. Does Mongolia have a stock market? Mongolia does. The Mongolian Stock Exchange. And this is where things get interesting. Compared to major global markets, it is small, less liquid, and underfollowed. The Mongolian Stock Exchange has approximately 160 listed companies. In 2025, the average daily turnover was approximately 500 to 600,000 US dollars, compared to the New York Stock Exchange, which has an average daily turnover of hundreds of billions of dollars. But frontier investors sometimes look exactly for markets like this, where growth happens before global attention arrives. After discussing currency risk in a previous video, Mongolia is a great example of why it matters. The Mongolian tugrug has experienced periods of weakness against major currencies. For example, in 2013 to 2016, the currency depreciated by almost 50% due to a crash in commodity prices, a drop in foreign direct investment, and import dependence. And between 2017 to 2021, the currency depreciated another 15 to 20%. Eventually, the government received support from the International Monetary Fund, rebuilt reserves, and commodity exports recovered. And lastly, during the COVID era, the currency depreciated another 20 or so percent. Imagine an American investor buying Mongolian stocks in 2011. Before they earned a single dollar of profit, they first had to overcome a 65% currency headwind. For foreign investors, a rising Mongolian investment does not automatically mean strong returns, because your final return depends on the investment and the currency. So what's the bull case? Mongolia offers significant resource wealth, strategic location, growing demand for minerals, a young developing economy, and an underdeveloped financial market. The potential upside is that Mongolia becomes a bigger supplier of critical materials needed by the global economy. How does one get into this market? There are one known listing outside of Mongolia of companies with operational exposure to Mongolia, Rio Tinto, ticker RIO. Another option is to invest directly by finding a Mongolian broker and opening an account with them. Then wiring funds to the broker, converting those funds to the Mongolian currency, and then putting in an order to buy shares. But frontier markets always come with trade-offs. The risks include a heavy dependence on mining, a heavy dependence on China, commodity price cycles, currency volatility, and limited market liquidity. Mongolia is a fascinating example of frontier investing. The potential is obvious. A small country with massive resources, located next to the world's largest consumer of raw materials. But natural resources alone do not guarantee investment success. The question is whether Mongolia can turn its resources into long-term, sustainable growth. If you're interested in deeper analysis on frontier and emerging markets, markets most investors overlook, consider subscribing. This is Frontier Market Intelligence.